Trading with Fibonacci, it can be really simple, but it's such an effective way of trading the market, like whether you're dealing with Forex, options, contracts, or stocks or crypto, it doesn't matter. Look, what we're gonna do here is go through this financial method that basically any trader, from beginners to advanced traders, can use it. And guess what? It works in any market and across all your favorite trading timeframes. Before we dive deep into the specific strategy, let me just mention this. This is not financial advice, and any trading strategy shown here is for educational purposes only. Check this out. Let me say we're looking at a clear uptrend here, right? The first step is to grab the Fibonacci Retracement tool. You just click on the icon over here on the left menu in Trading View. Now, we gotta have two specific points. In a strong uptrend, we wanna always drop from the swing low up to swing high, just like this on your screen. By default, the Fibonacci levels that pop up are basically these: the 0.236, the 0.382, the 0.5, which is the half of the move, and the golden ratio at 0.618, and finally the 0.786. Basically, you draw the Fibonacci on the impulsive move, and you look for the corrective move to bounce right off one of those levels. Those levels are supposed to be your entry points to jump into a trade. But here's the kicker, and this is the biggest issue with Fibonacci trading. Actually, which level is it gonna bounce from? The 0.382, the 0.618? Where do we actually enter the trade? This is exactly what I'm gonna answer for you and give you the most simple critical solution. So hit that like button and then let me talk to you about something that's even more important than the Fibonacci retracement itself, the trend direction. Look, this is extremely important to know the direction, otherwise you're gonna be trading against the current, and that would substantially increase your risk of losing capital. The simplest way to identify the trend, and this is super easy for both beginner traders and advanced seasoned traders, is using moving averages. Therefore, I'm gonna use not just one, but two moving averages, and I have a great reason for that. But first, the settings. I use the EMA 100 period and the SMA 200 period. The EMA 100 period is white and the SMA 200 period is yellow. To confirm an uptrend, before we even touch the Fibonacci, we need two conditions to be met. First, the EMA 100 has to be above the SMA 200, just like you see right here. Second, the price candles themselves must be above the 200 SMA line. When both of those line up, we know this market is securely in an uptrend. For a downtrend, it's basically the exact reverse. The EMA 100 is below the SMA 200 and the price candles are below the 200 SMA line. This method is our essential filter. It makes sure we only draw the Fibonacci in a correct way. Now it's time for the Fibonacci ratios we're gonna actually use in this trading strategy. First thing, we wanna declutter the chart. So let me show you how. We'll disable the background so we can focus on the price action. Then disable all of the default Fib levels. You don't wanna use those. They're basically convenience levels. We need to set our essential filter levels. Apply exactly these levels as I do. 1. Set the first level to 1 and color it red. Then the next one is set to 0.382. That's your critical level and we'll color it white. The next level is 1.382 and color it green. And the final one is 1.618, which is also green. So check this out. Here we are in a clear uptrend on the screen. Now most traders draw the Fibonacci retracement on impulsive wave. We don't do that. We do the exact opposite. We draw the Fibonacci retracement on the corrective wave. Why? Because that way we never want to have to guess which Fib level the price will bounce back from to start the next impulsive move. No need to guess the entry level either. We have a strict non-negotiable rule for entry. For this uptrend, draw the Fib from the top to the bottom of the corrective wave, just like here you see on the screen. And here's the important advanced step you want to write down. We choose the corrective wave where the end of the wave touches or passes the EMA 100 line. This is crucial. Now entry, target, and stop loss rules. The entry zone in this advanced Fibonacci strategy is the 38.2% Fib level. If the price breaks above the 38.2% level and closes a candle above it, that's your buy trigger. It's that simple. Our targets are also locked in. The take profit targets would be the 138% and the 161% Fib extension levels. And your stop loss has to be set slightly below the 0% level of the Fibonacci tool. By the way, if you want to master every single way to use this amazing tool, let me know after the video and check out the full Fibonacci trading playlist on the Indicator Insider channel. It's gonna make you think differently about corrections. Now, if we were in a downtrend, it's basically the same setup. Just flip. You draw the Fibonacci retracement from bottom to top of the corrective wave. The entry is the same. Break and close past 38.2% level. And the 0% is your stop loss, with the 138% and 161% as your TP levels. So if this has been helpful so far, wanna hit that like button, cause I'm gonna show you one more example on the Apple chart this time. You know, as I said, no matter the financial market or time frame, this advanced Fibonacci trading strategy works. Here's the Apple 1 hour time frame. Main trend is up, so we draw a Fib level on this wave from the swing high down to the swing low. And here's the buy trigger, the candle closing above the 38.2% Fib level. So simple but super effective, no matter if you're a beginner or an advanced trader. But here you go. Don't miss my last video where I share a simple buy-sell strategy. Go check it out for your next video. Happy trading!